Good evening. Welcome to Capital Market Live on Channels Television. I'm Ladi Williams. Just one more trading day left in the month of September. That's next week. But I hope it was a profitable month for you so far, and I would look forward to what October has in store. But let's take a tour outside the country and see how major markets we track performed this week. We see European markets close at a fresh record high. That was on Friday. Stocks tracked higher on news of China's stimulus blitz, and investors assessed fresh inflation data. We see the pan-European DAX there. We see the DAX, 19,473 points, up about 1.22% close on Friday. FTSE, that's in the UK, 0.43% up, 8,320 points. The CAC 40 in France, that was up 0.64% to close on Friday. To Asia now, Chinese markets closed their best week in almost 16 years as mainland's CSI 300 rallied about 15.7% for the week. You see the Nikkei 225, 39,829 points, up 2.32%. Shanghai Composite, that closed at 2.88%. Then we see the big mover there. The Hang Seng Index, 20,632 points, up 3.55%. A big jump there for the Hang Seng Index. To U.S. markets now, Dow Jones Industrial Average climbed to a fresh record on Friday as traders, digested new data that pointed to further progress in lowering inflation. Wall Street also posted 3 straight positive weeks there. For the Dow Jones Industrial Average, 42,313 points, up 0.33%. But on the flip side, S&P 500, that was down 0.13% to close on Friday. Tech-heavy NASDAQ, 18,119 points, 0.39% down. Let's look at some major data out of the U.S. This week. We'll see the Manufacturing Purchasing Managers Index, PMI, which measures activity level of purchasing managers in the manufacturing sector. We saw the actual 47.0 points. Forecast was 48.6 points. Then the previous we had was 47.9. Also out this week, the Personal Consumption Expenditure PCE Price Index, also referred to as the PCE deflator, is the United States wide indicator of the average increase in price for all domestic personal consumption. So that what you have there is the S&P Global U.S. Manufacturing PMI actual 47.0. 48.6 was the forecast. So we see it beat the forecast, and the previous, that was higher at 47.9 points. And for the PCE there, we see the actual was 0.1%, forecast 0.2%. So it beat that from the previous point of 0.2%, and definitely good data right there out of the U.S. economy. And back at the NASD OTC securities markets, performance ended the week positive as the index was up by 0.74% week to date. At the same time, the volume of securities traded this week, that was up by 10.09% to 592,000. Value traded was up 58%, while the number of deals traded carried out was up 154. Top advances for the week was Okitipupa Oil Palm PLC, NIPCO PLC, in General Insurance PLC, while the top decliners for the NASD, top decliners there, Friesland Campina, WAMCO, Nigeria PLC, Acorn Petroleum PLC, and Afriland. That's for the NASD unlisted market. Now to the listed market. The Nigerian equities market ended the week strong. As a result, the year-to-date is up about 31.68%. Trading activity varied with volume up, and value traded that took hit. Sector performance for the week, we see banking index, that was green. Oil and gas, that's for the week, that was up 3.28%. Consumer goods down, industrial goods down marginally 0.04%, and financial services insurance 1.43%. So that's how the market played out for last week. And definitely we know it was all about the MPC decision, another rate hike, 50 basis points. And definitely some investors got a surprise there. This next report takes you through that decision and how Mr. Olaimi Cardoso's 1 year in office, how that's fared so far. So that was the decision. This next report gives you a clearer picture.
It's the season of interest rate setting globally, and as a battle to tame inflation continues in most economies, some central bankers are nearing their inflation targets. Back here in Nigeria, after 2 consecutive months of slowing inflation rate, the Central Bank of Nigeria's Monetary Policy Committee held its 297th meeting.
It's on point at about 2 p.m.
Expectations from experts was that the MPC would pause its aggressive rate hiking cycle. But to the surprise of markets and analysts, the MPC raised lending rate by a jumbo 50 basis points.
The committee was unanimous in its decision to further tighten policy.
With this latest hike in lending rates, the Nigerian economy has experienced 8.5% increase from the 18.75% Mr. Olaimi Cardoso met since assuming the office as central bank governor in September 2023. Since then, inflation rate is up from 26.72% to 32.15% in August 2024.
Between 2015 and 2023, the past 8 years, witnessed an incredible amount of pumping of liquidity into the system. In other words, you had a situation where the response to excess money supply, little foreign exchange available, was to fix exchange rates, okay? Which now resulted in multiple exchange rates and arbitrage opportunities between one and the other, okay? And of course, this in itself resulted in a backlog of foreign exchange, because this is where all these things have come from. And sometimes people forget that this is the context in which we came into the saddle of the central bank.
As the cost of borrowing continues to trend up and the fight against inflation intensifies in Nigeria, mixed reactions trail what the impact will be on households and businesses.
Historically, the trend has been hiking, so I was just kind of hopeful that they may take a breather, but hiking because of the underlying fundamentals from the CBN's perch perhaps makes sense.
It's clear that the increase in energy costs is going to cause more inflation. They are trying to hedge that off. As the CBN governor also mentioned, the gains we have seen from reduction in food inflation coming from the harvest season might not be one that holds.
With just one rate-setting meeting left in 2024, it's a wait-and-see game now, as some say Nigeria might not be out of the woods yet when it comes to taming stubborn inflation. Laddie Williams, reporting for Channels Television News.
The battle against raging inflation continues right here in Nigeria. But joining us now to analyze most of the happenings this week, we have Noble Obasi, team lead, private equity, capital market, mergers and acquisitions at Stratton Bland Partners, is also a lawyer, joining me right here in the studio. Great to have you.
Thank you very much, Laddie. How are you?
I'm fine. And definitely, most experts were not expecting a hawkish raise. That's about 50 basis points.
Yes.
Some were expecting maybe about 25 basis points. Some said a hold was actually necessary, at this time with the Nigerian economy where it is. How do you see? Was it a surprise to you?
Yes. Again, it was a surprise to me because I felt that since the Federal Reserve Bank, the Bank of England, they've embarked on a prior rate cut, it makes it possible, for the central bank, to follow suit, right? And I would say that based on the indices, so I understand the fact that the central bank wants to fight inflation by increasing the rate and try to use it to kind of control the excess circulation of liquidity in the market. However, when you look at the indices in the economy, is it the right time for a rates increase in Nigeria? The answer is no. You have high cost of living. You have unemployment, rising unemployment. You have food insecurity, right? So I would have expected, right, that perhaps instead of having a rate hike, perhaps they should just sustain it, right? And look for ways to perhaps rejig the economy, right? For example, you look at the situation where, a hike in the rate, right? It means that banks, right, or rather the lenders, right, that they're not going to lend below that particular rate. And what does it mean? It means that the cost of goods and services is going to skyrocket, and it drops down to the society, right? It makes everything expensive. So honestly, I think investors are, again, from the investors' perspective, I think it is a bit surprising.
Following through with what we saw with the U.S. Fed, it was a big cut. We've seen, most central bankers also, going on a cutting spree at this point.
Yes.
But it remains to be seen if that cut will actually continue, in most of these economies. But for those countries, I see they're nearing their inflation target. So I guess it makes sense, for them to cut rates. But here, we're still far off, from our inflation target. So I just, for me personally, I felt like a cut was nowhere in the picture for Nigeria.
To be honest, right, I think you share the same sentiment. So if you look at, I think one of the bases, within the CBN had decided that they want to, increase, right, was the fact that they just saw that perhaps headline inflation, which is perhaps the food aspect, the commodity aspect, that it has, dropped a bit. And again, if you look at it from a modular angle, you see that we are in the rainy season, right? And if we're in the rainy season, it makes sense that there's going to be massive food production, right? So, for example, if you go to the market, you see a lot of foodstuffs in the market. Why? Because the rain, it's a harvest season, right? So, I think that's one of the reasons, or rather one of the indicators within the CBN, felt that that the inflation rates in Nigeria is dropping, and as a result,
with the PMS prices, I don't know if you've bought fuel recently, but what I have, and anytime I buy, I feel a pinch, right there. And I know that at some point, September, definitely when we get the inflation numbers for September, I wonder what it's going to be, because we did see, some kind of deceleration, but this time with what we've seen with PMS prices, I'm wondering what September is going to play out to be. But definitely this has an impact on most of the listed companies. With borrowing costs going up, it's going to get difficult for them to go on with their expansion plans. How are you seeing that?
Absolutely. So essentially, for the borrowers, I think this is going to be a very tough period because the banks are not going to lend below the interest rates, which is 27.25. They're not going to lend, right? Even if when you approach the capital market, perhaps the commercial papers, those are pretty much everywhere.
Those will be more affordable, I believe.
Yes, I mean, again, getting a good rate for your commercial papers, most times it depends on your rating, right? Again, the rating in commercial papers with this rate hike, right, it's going to cascade. It's going to have an effect, for commercial papers in issuances. So again, I think it's going to be a very, a little bit of a tough time, right? Again, business has been under tough, period of economic turmoil, considering everything that has been going on, like the PMS, that you mentioned, because PMS happens to be one of the key economic drivers in Nigeria. Modularly, it's something that if the price of PMS is brought to a very substantial level, it's reduced to a very substantial level, I think Nigeria is going to, the economy have a little bit of rejig, right?
Well, we're all trying to find out that sweet spot. That's the pricing, of PMS. We've had the issues with NNPC Limited, Dangote Refinery. We're trying to come to an agreement, when it comes to pricing, the product at this point. But again, we're all wondering what's going to happen, going forward. The rates are higher now. It's a high interest environment. For you, what do you think should be the plan, right now for most of these companies? Say, what, the cost of borrowing is really high. What else is out there for us at this point?
It's a very tough response. So I'll tell you this, right? So for companies that have existing, loan in their books, I think they might need to restructure, right? Again, restructuring is just taking the repayment further than now, because it's going to be a lot for them to keep on churning out those, repaying based on those high rates, right? And we always see in Nigeria, the unemployment rate, it keeps on rising. And with this rate hike, I'm sorry, it might, further, contribute to
And let's
high
not forget
unemployment rate.
minimum wage. That's also,
Exactly.
been increased. So definitely that would play out on most of these profit for most of these companies. But a lot to unpack there. I still have Noble Abasi. We're going to take a quick break now, and we'll take some other stories, some big happens in the Nigeria's capital market. That's for this week. Do stay with us. Welcome back. Well, let's get to some top stories in the market this week. See, Guinness Nigeria PLC is nearing the completion of its ownership transition as the company's board of directors confirmed the smooth progress of Diageo's sale of its majority stake to Toleram. In a board meeting earlier this week, the directors updated the Nigerian Exchange Limited and the public on the latest developments regarding the ownership transfer and the company's future plans. Significant transaction marks a pivotal shift for Guinness Nigeria, which has been under Diageo's majority ownership for decades. The deal involves the sale of Diageo's 58.02% stake, first announced in June 2024, ending Diageo's over 50-year direct ownership since the 1997 merger between Arthur Guinness and Grand Metropolitan. This change signifies a major transformation in the company's ownership structure and strategic direction. Then for Seplat Energy PLC, that's a prominent indigenous oil and gas company in Nigeria that made a noteworthy change to its shareholder structure following a new acquisition by its chairman, Udo Udoma. In a statement released on September 27, the company announced that Tiers Investment Limited, fully owned by Udoma, has acquired 22,571 ordinary shares in Seplat Energy. This marks Udoma's first investment in the company, as he previously held no shares. All right, let's get back to the conversation now. I still have Noble Abasi here with me. Great to have you, Noble. So,
Thank you.
Definitely, when we see rate hikes,
Yes.
normally we see the currency of that country kind of tend up. We saw that happen, in the U.S. when the U.S. first started their rate hiking cycle. Mm-hmm. The U.S. dollar hit a new high. Mm-hmm. That's talking about the DXY. But back here, we've seen the rate hikes here, but the Naira doesn't seem to be responding, like it should. You should see the Naira strengthening, at this point. So how are, I know you talk a lot with most of these investors, international investors. How are they seeing, what's playing out with the Naira?
So for the investors, right, for example, the foreign investors, right, I think it's the rate hike, right, it comes with its own advantages, right, which is there's going to be a lot of FPIs, right, for foreign investments, right. But however, the FDIs are coming to the country becomes a problem for them, to repatriate the funds, right, because of liquidity, FS, squeeze, right. It becomes difficult for them to, repatriate. So that has been one of the challenges, right, that investors, when you have conversations with them surrounding doing business in Nigeria, that has been one of their challenges, which is how are they able to repatriate their funds back to their, their home countries, right? So it's a major challenge, which I would, think that first, Nigeria is a monolithic economy, and that is actually one of the key major problems why we're having this inflation. If the critical sectors are rejigged, there's going to be inflow of forex, right? As a matter of fact, what Alhaji Aliko Dangote had done with the refinery is a very great one, right? I think, right, and I would suggest that perhaps the price, battle, right, between himself and NNPC, perhaps the CBN can, convey a stakeholder to see how that price can be, driven down, right? If that happens, I can assure you that so many things would, go right in this country. Because, like I said earlier, petroleum, the price of PMS, it's actually a major determinant of so many things that occurs in this country.
Right, and definitely with rate hikes, we see the banks,
Yes.
When it comes to interest income, that does well. So the banks are, happy with
yes.
most of these rate hikes, but it also, poses some risk, to the banks as well, because they now have issues with, some of these borrowers that have to pay more,
Yes.
and there you might see some of them say, we can't afford to pay, with this new rate hike. So, how are you seeing that play out, with most of these banks in Nigeria?
So I think as lenders, right, they will smile at some point whenever there is a rate hike. But a rate hike might not necessarily be sustainable for their business model, right? Because it will get to a point, companies might not necessarily want to go and borrow, right? And it becomes they wouldn't get any business if that occurs, right? So it means that it's a sort of a double-edged sword for them, right? So they can enjoy it while it lasts, but if business has so much pressure, they'll get to a point where they just go back and not take any more loan, and perhaps sit on their existing. Also, there's a rate of default, right? So with this high interest, this heightened interest, rate, right? You might see some level of default coming from some borrowers who may not be able to meet up with their, repayment plans, right? And that's where I suggested earlier about a sort of, having a repayment schedule with your lenders to see how you'll be able to pay it up. But again, there's a potency of defaults by borrowers as a result of this, interest rate hike.
I know you play in the private equity space. What are we seeing, this year and going into 2025 with all we're seeing right now with inflation and currency devaluation? So
sincerely, foreign funds are coming in, honestly, right, to a reasonable extent, right? Because, like I said, Nigeria is always a very great investment destination, right? And if you're having a high interest rate, it means that you see a lot of inflows of foreigners, right? So in the private equity space, you see, though it might not necessarily be as burgeoning as it used to be, right? But there's still some, spaces or pockets of that sort of investment.
And I'm also looking at mergers and acquisition at this point too. I don't think I've heard of too many.
Yeah.
Of in this 2024, but I know you play in the space. But I think you've seen some.
Yeah. So in terms of mergers and acquisition, right? I think one of the critical sectors where you see that played out in 2024 has been from the banking sector. So you see Unity Bank and Providus Bank. Right. They recently, had a sort of a merger, right? And the reason being that quite recently, CBN had mandated banks. They've mandated banks to recapitalize. And if you need an international authorization, recapitalize to 500 billion. If you need a national authorization, you recapitalize to 200 billion. So essentially, banks that does not really have the capital, right? They try to look at other banks to explore the opportunity, the option of an M&A, right, within that sector. So you're going to see, that sort of movement. Though there are a couple of other M&As within the energy industry, right? But again, the economy is not really so. At the moment, it's
so I guess when the economy is not so good, then M&As are not as. They don't flow that much, is what you're saying. But definitely, I know yes. That also brings some kind of M&A too, because some companies will have to, join with other big ones to actually definitely stay afloat.
Exactly. So again, economic, situations or rather economic turmoil would definitely bring innovative strategies for businesses.
And pushes everything at this point.
Exactly.
Thank you so much, Noble Bassi, Team Lead, Private Equity, Capital Market, M&As at Strennan Bland Partners. Thank you so much for coming on today.
My pleasure, Ladi.
All right, so to the top stocks, that's the traded this week. We see the likes of LLX leading, that's in the agricultural sector. Then we also see the likes of Regency Assurance PLC, that's in financial services, Flour Mills Nigeria PLC, and the big news there, the proposed buyout. The price is at about 17 naira per share. That could lead to, some are saying it could lead to FMN's delisting from the Nigerian exchange, but that's not happened yet. But we see the SEC gave them the go-ahead there to get that minority shareholders actually bought out. So you should keep your eyes on these stocks. Let's see how they play out. That's for next week. All right, that's the show today. Thank you so much for watching. As I said before, we still have one more trading day. That's in September. We'll see how it plays out. And I hope it was profitable for you. You can watch this again on YouTube for more details. I'm Ladi Williams. Thanks for watching and see you next week.